Welcome, guys, to another edition of the Trading Titans podcast. Today we're actually going to be looking at more trades, and we are also going to be talking about no pain, no gain. Right? This is a big issue for a lot of traders, so it's something we're going to touch on. And today's quote: "Don't be a chicken, be an eagle." Now, truth of the matter is, this quote is for me, right? So it's no one special, and it makes sense, right? I think I should tell you guys some of my own quotes, some of the things that I actually think. And in reality, and why I say don't be a chicken, be an eagle, takes us back to the story of the chicken and the eagle, right? So the eagle who was born amongst the chickens and was raised like a chicken and kept thinking he was a chicken. And then one day he walked out in the farm and then he saw all these eagles flying and he thought, damn, I want to be an eagle. I want to be flying with those guys. And the other chicken said, yeah, we know that dream, right? But you know what? You're never going to get there, so forget about it. But I guess all the while, he was already an eagle. He just had no idea. So I kind of think it's something that we all face in life. We get around every day with a lot of chickens. And they're also eagles, but we are always wishing to be an eagle, but never quite getting there. So truth of the matter is that I kind of wanted to bring this to bear and sort of bring this home. Because in reality, in trading, like anything in life, you got to reach. And if you don't reach, and if you sit there and think someone's going to do it all for you, then it's going to be quite terrible. So, half the journey is finding someone who will talk to you. I'm talking to you right now. That's just half the journey. I mean, if you decided to work with me on a one-to-one basis or look at any of our educational programs, it is just the first step. A lot of the progress has to come a lot from the individual's own feeling about themselves and about what they're doing and their own ultimate desire. There will be pain. When you trade, there are points where you're going to lose money and it will be painful. But without pain, there isn't any gain to start with. So you're going to it's not a singular experience of just excitement and making money. It is actually a dual experience of sometimes losing money and sometimes making money. What we want to do, however, is make more money rather than spend our time losing money. And there are ways to do that. There are ways that we should look at risk that we're not doing. There are aspects of markets that we should look at that a lot of people are not looking at because of the way they come into the business. So one of the things that you get when you work with us is that it is not about, making you feel like super excited about yourself. We like you to feel good about trading, but what we want to do is be able to teach you how to do it properly and do it like the way we do it and give you an opportunity to see how we're doing it and see our calls and hear us talk about the market and hear our opinions, whether they become right or wrong or they work out or don't work out. The truth is you get to hear it and you get to feel it and you get to feel everything we feel. The bottom line is that a lot of people don't want to see any pain. Someone once said to me that people don't like seeing people lose money or losing money themselves. And it's rather ridiculous. You're in pure capitalism and you don't want to at some point be on the losing side. You want to be always a winner. I can understand the scenario, but this is not going to be the case. So newsflash, guys, time for reality. There will be points when you lose money. It's how you deal with it, those situations that matter. Are you going to quit? Are you going to be a quitter? Or are you going to be the guy who says, you know what? I expected this to happen, so I'm just going to take stock. Are you going to be a coward? Are you going to start, aggressively risk managing your position now because you lost a little bit of money? Are you going to go to bed dreaming about it, thinking about that situation? Are you going to take it out on other traders? Are you going to take it out on the person teaching you? Are you going to take it out on the whole freaking industry? What are you going to do? And that's what matters. So the bottom line is that just remember, guys, no pain, no gain. So with not wasting much time, we are going to press on to the rest of the podcast. See you on the other side. Okay, guys, today I'm actually going to talk to you guys or walk through you the idea of advantageous traders. One of the good and beautiful things about market profile is that you can tell where the big traders will trade from, which is like incredibly crucial if you're looking for advantageous trading positions. So it's kind of like a bit of an arbitrage strategy where you look for where the big money is going to get involved, or the larger traders, one should say, and we want to trade from that direction. Now, there are various ways, of course, you can spot it, and one of the things that I'm looking for at the moment is I'm looking for what we call a single print, right? So, and I obviously, again, We cover a lot of this stuff. If you work with us on courses or any of our programs, in fact, you will learn everything you need to know about market profile. So I look for single prints, and one of the things about single prints are they got to be backed up with something else that is really, really, really important. And once we can get those two recipes together, then we want to execute. So right now, this is what I've done. And one of the cool things I've done is I've combined that with market inefficiency overall. So I've looked for an advantageous position, and I've also got an inefficiency, right, which is kind of cool. Now, I got to scan through a few assets to find something that kind of matches up this sort of trade profile. So I was unable to just do this sort of randomly. However, once you find setups like this, you got to execute on them. They're like once in a blue moon type setup. So we can observe this over time, and we'll see how it goes. And I will keep updating the video as we progress through the days or the weeks, as the case may be. Now, for those of you who are looking at this is a weekly profile, and yeah, I appreciate you guys don't know anything about market profile at the moment, but this is a weekly profile of data, and yeah, so that's what we're working on. Any questions, guys? Feel free to leave comments or to email me directly. But beyond that, have an awesome rest of the week, and we keep watching this video, of course, and Happy New Year. Alright guys, so just continuing on from what we were looking at, so actually at $SEK, which was the position I had on. Right, so again, we're almost there. Okay, so it was a bit of a kind of a tough week actually last week, just waiting for that gap to run. So now we're into a new week. As you can see, the gap getting filled, and one of the things that we want to note is that gaps will always get filled. Okay, now you can't see gaps unless you got market profile. Okay, and if you can see gaps, then it's all about timing. You're not always going to be perfect with timing. As you can see, I was long here and I had to endure a bit of pain. Now, when it comes to risk management, you won't see me put any stop losses in here, and reason being is that if you want to have a better idea about risk management, then you should join us. I keep saying this, and I'll keep saying this. We do have if you look on the website now, we do have a trading room. So you should join us in the trading room at the very least. Other than that, trading room, of course, you can join us through the Next Gen dashboard, which is our new entry point. So again, basically just follow the links on the website, and it will take you where you need to be. And you will get an opportunity, obviously, to see how we do things. Again, like I said, we have a 2-week trial, right? So you can just come and hang about. It doesn't really matter. At some point, we may well get rid of the trial. So just look at it as a limited opportunity to kind of get an idea of how we do things. And when you join us in the trading room, one of the things that you're actually going to find is that we do a lot of day trading with sterling. So we have a focus. Okay, so sterling is our day trading asset. Okay, that's all we do. That's all we day trade at sterling. And that's what the trading room is about. It's about day trading sterling. I'll talk about some of the signals that come out on the dashboard and stuff like that. So it's really interesting, and I think you will learn a lot about trading if you're new to this, or even if you're experienced. There's nothing wrong with seeing someone else's opinion, and if it adds value, then join us. If it doesn't add value, then so be it. Right? But at the end of the day, we like to think that we're in the business of making money, and we want to show you how we do it and how to do it. We're not in the business of, we don't work for brokers. That's not the idea. So, it's not about you opening a trading account. We honestly don't give a cahoots about that. What we really care about is that you make money, and this is great for us, and it's great for our business model, and you become a professional trader, which I suppose is why you're probably here, looking to see how you can make this into a viable investment, right? So if you want to know about risk management, it's best you join us, because then we can actually show you what we do, the reasons why we do it, and then you have a better idea about risk management. But on the flip side of the fence, obviously it's absolutely no good sort of discussing it at this early stage, because then, of course, this is a podcast. At the end of the day, you're not really going to get as much as you are hoping to get from it. But in reality, anyway, I'm hoping this position by the end of the week, we should trade the gap fully or close. So already we're in a bullish run, which is actually quite positive. So hopefully by this evening, we are done, right? And that will be good, and that will be reflected. However, of course, for now, the trade is still running. It's still active, and obviously, that's the best that you can see. When it finally closes out, I will try and do a final recording to kind of reflect that. And if it changes direction, it doesn't close out, we'll still be sitting here. So it's not really that much of a difference. Now, moving on, euro dollar, we also have a gap trade on euro dollar, which is actually almost hit. It came really close, but it didn't actually hit, but I think it will hit. So again, this one is almost done and dusted, so it's actually quite nice when it finally comes together. I think it will be a good one. Yeah, so it'll be quite nice. So other than that, there you have it. So you got to see how we play with gaps, and I've been talking about gaps for a few weeks in terms of it's been a market inefficiency, guys. So again, you know, there you have it. Now, there are a couple of other things as well that I can sort of throw into the mix here with market profile, which is kind of important. I mean, you've got to realize when you're dealing with a profile, we are looking at the raw distribution here. So this is how the asset distributes. So you're not really getting any kind of noise. What you're getting is a completely filtered picture. So for example, I know this is a trend week. I can actually see that the market was quite strong, but I can also see that value perception was much lower. And because of that, we had a movement of price which moved away from value, and then that formed a gap. And this is an efficiency because value is lower but price is higher. So 10 chances to 1, we have to see if the market is going to respect the new price and create new value or go back. 10 chances to 1, because this is a liquidity problem, we tend to go back, right? And that's exactly what happened here. We traded that gap. So there is a logic behind all of this. So it's not like some kind of fugazi. It's just that you're looking at raw distribution here. So you're having a much more professional look at the market. And as a result, you're going to have to start making other kinds of decisions beyond just support and resistance. And obviously trading inefficiencies is still one of the big things in market profile, and some traders do it. Sorry. And again, I think it is quite a positive thing if you're just getting into market profile to start focusing on these kind of plays. So again, that was another example, and we saw a similar scenario here, and that is why I'm trading this short right now. So again, this is some of the things that you will learn. There's much you can learn about market profile, so you can develop a whole myriad of strategies for different types of investors. So if you're a professional asset manager and you want to build a kind of strategy for an investor that's high risk, or someone who's a bit more low risk or wants to follow a particular asset trend, then this is where you need to be, guys. I'm hoping that over the years I've seen a lot of pros on market profile. So I'm hoping that people who know what they're doing are already kind of there, but people who don't know what they're doing are still searching. Then this is where you ought to be, guys. Let's cut through the bullshit right now. This is where you ought to be. So other than that, guys, have fun. And I will see you on the next part. Hopefully when all of this has gone to the good. Any questions, guys, just let me know. Okay, guys. So that's pretty much it, actually. We got a pretty good move. Just period gone by, the last 4-hour session. So yeah, that pretty much brings it to a close. I mean, we're almost already trading the gap, so I've decided to jump. As you can see, I've cut these positions a little earlier, and this was my dollar SEK as well, which is really, really close, and I'm quite happy so far with the surge. So I don't necessarily need to do anything anymore, so that's pretty cool, actually. So that little action there has pretty much taken me out of the market. So as you can see, that's the P&L pretty much from those two trades, and obviously I can relax now, and that's kind of what I was hoping for. So again, you can see another sort of idea, I guess, around gaps and how we trade gaps. And in fact, for the last, I think, 13 podcasts, all that we've been doing is gap trade. So again, I think it's very useful that you guys come to market profile and also sort of build a really robust knowledge about how to use it and how to use it properly, so you can also do these kind of returns. And at the end of the day, call a spade a spade. I've become really, really comfortable with risk and other aspects just for the simple reason that I know I'm trading a very optimal idea and I'm using a very optimal tool. So this is kind of just a look really into how professional operations run when they talk about trading and investment, and it's not what you tend to see a lot of. And naturally, everything, the things you see a lot of are the things that generally don't work, and I can appreciate that. So if you're looking to sort of get a little bit more understanding experience, then don't hesitate. I mean, contact us. I don't care how you contact us. Call us, send us an email. We'll try and respond to you, and we can have a conversation, and then we can see where we can take it. But other than that, I hope you enjoyed this podcast, and you enjoyed some of the stuff that we're doing here. And in future podcasts, I'm going to talk to you guys about value. I'm going to talk to you guys about point of controls. I'm going to talk to you guys about a lot of stuff. But meanwhile, I will hope you have an awesome rest of the week. And for this edition of Trading Titans podcast, from me, Daniel, have fun.